Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Tuesday, January 13th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So today the CME is expected to have a press release about a new silver contract, a smaller one allowing different traders a different barrier to entry with a 100-ounce silver contract. I've been coordinating with the CME group for the past 2 years about implementing this type of product here because of the rising volatility, the rising margins and things like that. From my perspective, I like to get the position sizing right here. And when you start looking at the volatility in a lot of accounts and things like that, it becomes much more difficult, especially with the options market with such wide bid offers at the moment. So this new product here should allow people to come back in and bring in a new class of speculators here that are looking for some closer to that round the clock action here in the silver market. Now, overnight, the stock futures, they are slightly lower ahead of today's CPI report. What's interesting is what are the odds that the DOJ launches this probe into Powell, into the Fed here, and then you get the CPI report coming in lower than expected. It would be really a 1-2 punch here against the credibility surrounding the Federal Reserve. Now looking at the small caps, they've been in favor recently with the Russell 2000 outperforming the S&P 500 over the past 7 sessions. You see the NFIB, the December U.S. Small Business Index, it rose here to 99.5 in December, and that's higher than the 99 we've seen in October and November. So you're seeing a lot of optimism here surrounding small business, small caps, the implementation of AI, really increasing that productivity that we're seeing in small businesses. Now, JP Morgan's trading desk predicts a rally of 1.75%. Now, the S&P 500 down about 0.1% here, sitting at 7,005. So that's down 11 points. You got the NASDAQ down 72. That's 0.2%. The Russell down about 0.2% as well. So red across the screen here ahead of this CPI report. And the expectations are that JP Morgan says we get a 1.75% rally if the S&P 500 comes in line with or cooler than the estimates. Well, we start looking at what our models are showing here, and they do show that we should see that downtick in the CPI, where the street across the board is looking for a much higher number here. So we'll see if we get this reversal on the markets here. Not a recommendation, just more of an observation as we take a lot of data, we look at signals and things like that. We run our own models here with the team, and we start to look at some of the output that we get from these various models. Now looking at the precious metals and the broader macro markets here, precious metals, they are pulling just back a bit here from their all-time highs. You got silver up about 66 cents. So nice move in the silver market, 85.75. I had sent out the chart pack and wrote an article on Kitco where we were looking for a breakout after that 4-day consolidation, back on up to the all-time highs. A lot of clients positioned for that. We saw that breakout occur. We've seen futures reach those all-time highs. Bit of profit taken at the end of the trading session yesterday. Little bit in the overnight session here, as we should continue to see. Most likely those margin requirements are going to continue to get raised here because of the increasing volatility in the market. You look at the 14-day average range on something like gold, $92.50. Key level support's going to be right around 43.14, so about $250 lower from where we're at here at the moment. When you start tacking on $100 moves in the market, you know it's something that we could see come into play here. Now that's a key level of support that I would be looking at some positions, and I would be looking at things like the April contract and farther out, even June on the futures contract as well. You go to the silver market, looking at the 14-day average range, $4.88. What that essentially means here is that with futures at $85, you could be at $100 by the end of the week on this thing if you could tack together 3 of those moves upwards of where we've been here and what the average volatility has been. Your key level support is going to be $74.25, so about $10 lower from here, and it's about 2 times the average true range. So it lines in with what we're seeing here, and those support levels have been rising here steadily. Now you look at the precious metals, the ETF flows here. With ETFs, they've been buying gold, silver, palladium. They've been selling platinum. The thing about the palladium market here, and if you look at that chart pattern, it does have this nice kind of Nike swoosh type U going on here recently after making recent contract highs. You look at the gold market, the ETF flows here, the exchange traded funds, they added about 235,000 troy ounces of gold in the previous trading session here. And total gold held by ETFs rose about 0.2% this year to 99.2 million ounces. That's the highest level since September of 2022. You got gold up about 6.4% this year, and it tacked on about 2% here yesterday. You look at the silver, the ETF flows on there, it's up about 0.3% year to date, and those total ETFs, they did decline here just a bit. Now, if you look at those ETF flows, you've seen the exchange traded funds, they added 2.2 million troy ounces of silver to the holdings in the previous session. I anticipate that a lot of that was going to be reversing on positions, buying the breakout here, and some short covering that's been going on. You look at the palladium holdings, they increased by about 1,400 troy ounces, but the most important thing about that is they've tacked on some gains here as far as ETF flows for 7 straight days. You look at the gold-silver ratio, interesting, not actionable, sitting at 53-1. So that's a fresh low on that particular ratio. And then you look at the macro markets, the equities, bit softer overnight here. So we're going to have some earnings from JP Morgan, Bank of New York Mellon, Delta Airlines, among the companies here that are expected to report results here before the market opens. So JP Morgan's revenue from trading stocks and bonds is expected to show about a 13% increase for the same period in 2024. You look at the strategy here, the US earnings here should really easily beat modest expectations driven by just better than expected sales growth, both in demand and pricing and margins, and especially from AI related names. So we expect to see this type of momentum go higher into this earnings going forward here. So you look at the economy, again, we had that NFIB small business optimism come out here. We're gonna have that CPI at 7:30. So expect to see some volatility around there. And what I'll be watching is I'll be watching for the release. Do we come in above or below? And then what is the impact on the dollar index, 10-year treasury yields? I'll look at the 10-year, then I'll start looking at what equities, the gold market, things like that. Because remember, all these things, they're all interconnected. It's never just one thing, it's everything when it comes to the commodities markets. And you'll get one thing move the next and the next, and then you could see things the way they unfold and potentially exploit markets that have not moved yet in any kind of direction. So you'll have from central bankers, you're gonna have 2 different central bankers come out here today. You're gonna have Barkin, you got Musolium, both coming out doing some discussions here on where things are going. You look at the rate cut expectations. Well, they're declining a bit overnight with the CME's Fed Watch tool sitting at about a 5% chance. So I'll be watching that too, how that reprices after we get this release, because if it comes in below expectations, you could see a big jump up there, at least into like this back to 16 to 25% chance that they cut rates at the January meeting. You look at the March meeting sitting at about 24%. We could see that jump up to 35 to 44%, and that comes back into play. You look at the FX markets, the risk rundown, the dollar index, just kind of anchoring here, 98.72. There was a bit of a sell-off yesterday. Markets coming back here a bit. The euro currency sitting at 117.01, not really doing anything, sitting in a neutral trend. Dollar sitting neutral trend. 10-year treasury yields kind of at the top end of the range, 4.19%. Range of 4.22 down to about 4.11. Key resistance on 10-year futures that I'm watching is 113. You got to break out above that. Then you're going to see those yields break below 4.10%, get back down to 4%. Bitcoin futures looking really interesting here. So they've been steady and they've been starting to turn up here. We've seen a series of higher lows on the Ethereum contract, and then Bitcoin futures are stringing together. They had a bottoming formation. Now looking at a potential breakout to the upside here. So steady overnight, 92,500. Key level, 93,000. Above that, we can start seeing the 95, the 100,000 come back into play. Your trend support really is down at about 86,800, but that's been rising as well. So you're seeing probable ranges of higher highs and higher lows on that chart. And you'll get the S&P 500 gamma exposure sitting at positive. You go to Europe and Asia. European stocks, they hover near their record highs. Asian stocks briefly jump to a fresh record. The MSCI Asia Index tacking on about 1.4%. So that's the most in a week. So again, fireworks surrounding the CPI report are going to come out. The street is completely hawkish on this thing. I think you look when a lot of this data was collected here, you look at where things like agricultural products are, where the housing market was, where the energy data was all at, and they were all much softer here. So I would not be surprised to see a softer than expected CPI report and the market just have some quick explosive volatility in this market back to the upside. So we'll see how it all plays out. You guys got any questions? I'll be traveling tomorrow. I'll be gone most of the day here, available for the first part. I got to step out. I got to clean up the haircut this afternoon here because of the fact that we do have our company holiday party on Friday. So I'm going to look fresh for the team. So you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.